we're delighted to be joined by Nerida Conisbee, the Chief Economist of REA Group. Interestingly, REA Group has some of the largest data sources of people experiencing and looking at property in the whole of the country. Nerida, in addition to this incredible access to data, is one of Australia's leading property experts and an authority on real estate markets from across the country. They're a big supporter of ours today, and we're very, very pleased. She'll be helping us answer the question, what's next for Australia's property sector? Would you please join me in welcoming Nerida?
Can you hear me? Oh yeah, good. All right, so today I'm going to be talking where we are in the market at the moment. But first I want to discuss some interesting research that we've done at REA. So hands up, who thinks Brisbane is Australia's most livable city? There's a few of you. Thought there'd be more. Of course, the Economist has come out and said it's Melbourne. So the Economist has said Melbourne's the world's most livable city. I'm an economist. It's hard to argue with the Economist on that issue. But we recently looked at suburbs that are highly livable in Australia. And the characteristics we looked at when we're looking at highly livable suburbs were things like congestion and travel time and good schools, good public transport, good retailing. And it was interesting that Melbourne did feature quite prominently in the top 10 list. So Melbourne, St Kilda West came out on top. So St Kilda West is what we consider to be Australia's most livable suburb. But number 2 was South Brisbane. And when we started to look down the list, 7 of the top 10 most livable suburbs in Australia are now in Brisbane. So there is a lot of change occurring in this city, and I think a lot of the change making Brisbane so attractive to so many people has a lot to do with how unattractive a lot of the aspects of Sydney and Melbourne are becoming at the moment. So both those cities are becoming very congested, they're becoming very expensive, and it is making Brisbane such a more attractive location for so many people. We do, of course, need more jobs here, that's the problem, but at the moment, a really, really livable city. Today, I'm going to try and find that clicker, which I don't know. Oh, there it is. Today, I'm going to be talking through some of the myths and I guess some of the commentary around the property sector at the moment in Australia. It's really hard to read the data and it's really hard to read the media as well. So a lot of them, I mean, we're part of the media as well, so we obviously contribute to a lot of the confusion out there, but a lot of it is hard to read the data. Is there a property crash coming? I'll talk about that today. Are we in a situation of oversupply? Is that a problem? How long is it going to be a problem if it is a problem? Are we in an affordability crisis? Property is expensive in Australia, but it is expensive everywhere in the world. Is it a crisis or is it just a problem in some areas? And investors, do we have too many investors? Negative gearing, capital gains tax concessions are often blamed for affordability, and in some cases they are pushing up prices. But are there too many investors in the market? Do we have too much rental housing across our capital cities? I put that picture of that house up there. That looks a lot like my first home. And when I'm talking to first home buyers, I think one of the things that I really point out is you can start pretty low and get pretty high. I mean, not that my house is that great now, but certainly that was kind of how my house looked when I was buying 15, 20 years ago. So housing has always been expensive. We do have affordability problems, but I'll talk about the locations of where those affordability problems are at the moment. We have access to an amazing amount of data, and on realestate.com.au we get around 5.9 million unique visitors on the site every single month. Some months we get up to around 7 million, depends how interested people are in property that month. We get around 6.5 million visits per day. We've got around 98% of all property listings in Australia. That's not to tell you how powerful our site is, but it does give us amazing insights to what Australians are looking at in property. So we know how many Chinese are looking at a certain development in Brisbane. We know what happens when government policy is changed. We know what happens when the budget came out. We could see what was happening around Australia. We could see what happened when Trump when Trump won the election, we started to see these big spikes coming from LA of people looking in Sydney. So we do see these amazing things on our site, and I guess the thing is that we see it real time, and a lot of the ABS data, ABS obviously collects some really interesting data, but there's a big lag. I mean, you get your GDP figures for June in September. The census is still being released, the data from the census that was, now well over a year ago. But we get it real time. So we get some really, quick data that gives us a really clear insight as to what's happening in the market. So today I'm really going to talk you through that data. So really on the demand side, what is the data telling us, where we are in the cycle? But I'm also going to talk through opportunities, as I think that's the thing that everyone wants to hear about. I was on the ABC recently, and obviously the ABC is, pretty serious, a pretty serious news network. We were going to be talking affordability, so I had all my stats on affordability ready to talk about. I got into the interview. 1 minute in, they said, "Oh, let's start talking about opportunities. Where should we buy?" So I think that's, in the end, everyone wants to see where the next thing is, where the next opportunity is. So I will talk about where we're seeing lots of opportunity based on data from our site. Overwhelmingly, people on our site show very, very high engagement for certain locations. And when we have a look at the certain locations that they find more preferable, they tend to have three main characteristics. So they tend to have really good shops, they have good schools, and they have really good public transport. Surprisingly, being close to a city, a CBD, is not that important for the majority of people on our site. Being close to the beach is more important here in Brisbane and, further north, so Sydney and Gold Coast in particular. People really want to be near a beach, but across Australia being near a beach isn't that important. But overwhelmingly, good schools, good public transport and good shops, and people are pretty happy from a lifestyle perspective. People also want to be in really big homes. And when we have a look at the way, the types of properties that people are very engaged with, they do tend to be the big 4-bed, 2-bath, 2-car garage on a 650 square metre block. So very big for Sydney. Trying to get that sort of property in Sydney, you need to be pretty far out of the city unless you're paying a lot of money. Obviously in Brisbane, properties like that are still fairly readily available and fairly affordable. People don't want to pay a lot for them. The price point that people are most engaged with on our site is around $650,000. So you can see there how we're starting to have problems in Melbourne and Sydney, where trying to find homes at that price point is becoming more and more difficult, impossible in the case of Sydney, and very much on the outskirts if we start to look in Melbourne. People will make a lot of trade-offs between home and lifestyle. So you'll start to see people on site making trade-offs between living on the fringe, getting the house they want, and then moving inner, living in an apartment, townhouse, smaller property, and getting the lifestyle that they want. And so there's price points for both those options, but really what it comes down to, what sort of home are you prepared to live in, how small can you go, and that does determine the location that you end up in. So, property crash, and there was a segment on Four Corners recently that we are heading towards a property crash. It was a bit short. I thought it was a bit short on detail. What's going to trigger it would be is my main question. Without a doubt, property is expensive in Australia. There's a group that does some work on affordability across the world, and Sydney comes in as the world's second least affordable city after Hong Kong. But Australian cities do feature very prominently. So we're expensive. There's no doubt about it. It is very expensive in Australia. Australians are also very property obsessed. We're very similar to the rest of Asia. Asia Pacific, countries across Asia Pacific are property obsessed. And it's very different if you go to the US and if you go to Europe. And one of the reasons it's so different there is that people across our region have done very well out of property. People have made a lot of money from it. If you bought 10 years ago in Sydney, you would have made a lot of money on your home. If you were an investor, you probably would have earned a pretty decent rental yield on that property. We used to own a website, a similar website to realestate.com.au in Italy, and that website was called Casa. In Italy, people aren't property obsessed. And the main reason being is that most people that bought 10 years ago in Italy, their homes are still worth less than they were 10 years ago. So they haven't done that well out of them. If we go to the US now, the housing market is doing very, very well. But again, house prices only just got back to where they were 10 years ago. So people don't necessarily aspire to own property in the same way that we do. A lot of Australians now don't just aspire to own their own homes, they do also aspire to own an investment property, and that makes us quite unique from a global perspective. Our demand index is on the left-hand side, and we've been tracking that since around 2013. And the way that we measure demand, we look at the number of people looking to buy and we compare it to listings. And you can see there since 2013, we have had this massive ramp up in our demand index over that 4-year time period. So a lot of that's to do with more and more people looking to buy. So there's more and more people wanting to buy investment properties, buy their own homes, not just from Australia, but from overseas. I think around 5% of people searching on our site are actually from overseas ISP addresses. But the other thing that has really made a difference to the demand index is that we are seeing fewer listings over the long term. So those fewer listings are occurring primarily because more and more people are amassing portfolios. So again, that desire to own an investment property is just so strong in Australia and has really had a significant impact on listings. When we have a look at listing numbers, the things that really lead to a big jump in listing numbers are very, very bad economic conditions. The GFC was the last time that we saw a big jump in listings, and it was primarily because people lost their jobs and couldn't pay back their mortgages. So a jump in listing numbers is good news for buyers, obviously, but obviously the conditions that lead to an increase in listings are generally fairly negative. It doesn't look like we're having a property crash at the moment. Demand is still going up. We're not quite seeing the levels of demand increasing to the same extent as we saw last year, so that's probably the biggest factor. The main driver of that is interest rates. So last year we had 2 interest rate cuts. It led to a big surge in demand. So every time the Reserve Bank cuts rates, people can borrow more, and we see more and more people looking on our site. Every time there's an increase in rates, we see people back off. So the Reserve Bank isn't moving anytime soon. I can't see them moving within a 12-month time period, but banks are starting to increase rates. So that's starting to slow down activity. It's still increasing, but it's really starting to slow down the increase. What could be a trigger? It would be jobs loss. That if we start to see rising unemployment, that would be a trigger to start to see a bit of a moderation or potentially a significant moderation in price growth. To give you an idea, when the GFC happened, Sydney and Melbourne saw price drops of around between 8 and 10%. That's probably what we'd be looking at if we had a fairly significant increase in unemployment. The other impact, of course, could be rising cost of borrowing. Most long-term forecasters of interest rates consider that interest rates probably won't get that high over our lifetime, primarily because there's more savings in the system. We've got an ageing population, lots of other reasons, but it doesn't mean that interest rates won't rise. And they probably will rise. They're already rising from banks. But it's unlikely we're going to see a massive run-up in interest rates here in Australia. A property crash isn't happening now, but it happened recently. If you're in Perth, if you're someone who has been developing in Perth or you're in the Perth market, Perth has had a property crash, and it was about jobs. It was about the end of the mining boom. People didn't have jobs and they moved out, and they moved to Sydney and Melbourne where the jobs were. So overwhelmingly, what drives price growth is jobs. At the moment, jobs are primarily in Sydney and Melbourne, more and more people wanting to live there, and as a result, we are seeing very, very high levels of demand in Victoria and New South Wales. Tasmania is interesting. You can see there very high levels of demand in Tasmania. Tasmania is a small market. It's only 750,000 people, but at the moment, it is seeing huge levels of demand, not just from Australians, but also from overseas. A little bit to do with affordability. What you can buy for $1 million in Hobart compared to what you can buy in Sydney is eye-opening. So affordability is part of it, but also the education sector is really taking off there. So there's been a big push by the University of Tasmania to overseas students and interstate students, and we're starting to see real growth as a result. So Tasmania is pretty red hot at the moment, not just from buyers, but also renters. Oversupply is another hot topic, and it's particularly a hot topic here in Brisbane. I know that it has been spoken about endlessly over a prolonged time period. It's interesting looking on our site, we're continuing to see fairly high buyer demand in Brisbane. We actually saw an increase in Chinese buyers looking at Brisbane over the past 12 months. The rental issue is the problem. So we are seeing very low levels of rental demand for Brisbane apartments at the moment. Will it remain a problem? Probably not. I'll talk about that in a sec. Melbourne, surprising on the upside. I think, a lot of people, when they saw those charts looking at the level of development taking place in Melbourne, were very concerned about the level of development taking place. It is being absorbed. We're continuing to see high levels of buyer demand. We're continuing to see high levels of rental demand. So any crisis, oversupply crisis, that a lot of people were talking about certainly hasn't eventuated in Melbourne. And Sydney, we really can't build enough in Sydney. It does need more property. If Sydney does want to continue to have jobs growth, it needs more housing for people to be able to afford to live there. And at the moment, we're really not seeing anywhere near the level of development that we need. To give you an idea of how bad Sydney has been, we've seen 30% less housing developed in Sydney over the past decade. And last year we finally saw Sydney catch up with Melbourne in terms of supply. This year it's gone backwards again. So it's a prolonged period, it's a long-term problem in Sydney that we're not really seeing enough housing development for the level of jobs growth that's occurring in that city. Conditions are getting really tough for investors and developers at the moment, and this will limit new supply. So we are starting to see building approvals slow down quite significantly across Australia. There's a very clear reason why this is happening. If you have a look at who lives in apartments in Australia, the ABS found over 50% of people who live in apartments in Australia are renting them, so 50% are investor-owned. Investors are finding it tougher and tougher. There were some changes to negative gearing in the budget. If we have a Labor win, an ALP win, there's chances that a negative gearing and all those capital gains tax concessions will be scrapped. There's additional taxes on offshore buyers. We clearly see the impact of that on site, that when new taxes are introduced, we see a back off of overseas buyers looking at Australia. So they do have an impact, and they do contribute to a drop in interest. With fewer tax concessions for off the plan, fairly uniform across Australia, but probably the biggest one is that finance is becoming more and more difficult for investors to access. So all of that is meaning less investors in the market. A lot of new big projects obviously need pretty major pre-commitments to get started, and that means fewer starts. The other thing too, the Chinese capital controls have come in as well. So we're going to see more, we are likely to see less offshore developers here in Australia. So it's probably not such a problem for Melbourne and Sydney in the short term. I think longer term it is a problem. Melbourne and Brisbane. In Sydney, it is a big problem that Sydney needs more rental housing, it needs more owner-occupier housing, it needs all forms of housing, and this will really slow that development going forward. Housing affordability. It's interesting talking about housing affordability because there's so many definitions as to what it is. And I guess from my perspective, me not being able to afford waterfront Manly for $7 million isn't really an affordability problem. It's a bit sad for me that I'll never be able to afford that, but it's certainly not an affordability problem from a policy perspective. It shouldn't be up to government to try and fix my desire to live waterfront Manly with my ability to buy waterfront Manly. But it is a problem if obviously the most disadvantaged people can't afford housing. So, social housing, which I'm not going to talk about today, but social housing is a problem, and that really needs to be resolved. But at a more general level, I think affordability is the idea that if you're under housing stress to buy your home, then that home is unaffordable. And there's quite a strict definition of what housing stress is. It's when you spend 30% or more of your household income on rent or on your mortgage, you are considered to be housing stress. So a city, I consider a city or a suburb to be unaffordable if at the median, if you're earning a median income, you can't buy a medium priced home without going into housing stress. If we have a look across Australia, Brisbane doesn't really have such a problem. If you're on a median income, you can afford to buy a medium-priced house or an apartment. In Sydney, in Brisbane, in Melbourne, you can't afford to buy a house, but you can afford to buy an apartment. Apartments are really affordable in Melbourne at the moment. One of our the most viewed apartment on our site this year was one in Melbourne CBD. It sold for $240,000. So, it gives you an idea. I mean, obviously there's some really beautiful apartments in Melbourne, very expensive apartments in Melbourne, but there is also a lot of very, very low cost apartments as well. So it is very affordable at the moment for an apartment. If we move to Sydney, you can't afford to buy, if you're on a median income, you can't afford to buy or rent a medium-priced house or an apartment at the median. So Sydney is our problem area, even at the most expensive level. We now have 21 suburbs with a median of 3 million in Sydney. If we go to Melbourne, there's 2 suburbs, East Melbourne, Toorak. If we come to Brisbane, there's no suburbs with a median of 3 mil. I think Tenerife is getting close, but it's certainly a little bit away from hitting that $3 million mark. So at all levels, Sydney is our problem area and is the area we need to fix affordability in. What are some solutions? More supply. I got shut down recently not shut down, but kind of LinkedIn yelled at for saying supply is our solution to affordability, and it works. If you look in Melbourne, all that apartment development has led to more affordable apartments in Melbourne. So more supply, I think, is the most critical one. Build to rent, which Brian talked about, is good for affordability for renters. And the other one we could do is encourage jobs growth in areas with lower cost of living. That's difficult, but I think that's one that we do need to consider, that if you start to move jobs away from Sydney and Melbourne to places like Brisbane and Adelaide, it does support those cities in terms of economic growth, and they are also far more affordable. Companies hate being told to move headquarters. People hate being told to move because of their jobs, so it's very difficult. So the easier way is to really just create that level of supply in areas where people want to live because of where their jobs are. So what are some of the opportunities with what's happening with affordability? We're starting to see these areas see very, very elevated levels of demand on site. Central Coast came up last year. We started to see high demand suburbs appearing in the top 10 list for New South Wales on the Central Coast. That's flowing through to price growth. It's also flowing through to employment as well in the area, which has been quite interesting. We've started to see a few companies follow the jobs growth, the population growth up to Central Coast. So Central Coast is interesting. It's almost becoming like a mini Sydney. You've got your premium suburbs, you've even got your hipster locations. There's this wide diversity of housing on the Central Coast, so it's kind of almost feels like it's becoming a little mini Sydney. Tasmania I mentioned before. Gold Coast is another one. I know Gold Coast over the last 12 months has seen stronger price growth than Brisbane. We're seeing enormous levels of interest in the Gold Coast, particularly from people in Sydney, lesser extent from Melbourne. But certainly there is lots and lots of interest from people not just looking to buy, but also looking to rent. Opportunity too. Infrastructure is really a big driver of price growth, particularly when the new infrastructure development is announced. And the Western Sydney Airport has been on the drawing board, I think, for 80 years or something. But as soon as it was announced and there was a date set for its opening, we saw Bringelly, a suburb located close to the airport, jump by 30% in 3 months. So there's this, once those projects are announced, we see these massive jumps in prices. Train lines, the Northwest train route, we started to see a lot of suburbs get over that $1 million mark as soon as that train line was announced. So there's this huge jump. If you're very astute with what's happening with local planning and new developments, they can bring huge opportunity once those projects have been confirmed. Counter-cyclical, another opportunity. Perth continues to see declines in prices. It is getting more and more affordable, but we are starting to see some of the premium suburbs increase in value. So the inner west, in particular in Perth, on our site, those northern beaches suburbs, places like City Beach, Scarborough, are starting to see very elevated levels of demand, not just from buyers, but also renters as well. Townsville, prices are still going backwards, but it was interesting, that home there was our most viewed property going to auction last month in Queensland. We'd never seen that before. Typically, they're Brisbane or Gold Coast houses that we see as most viewed, but this one in Townsville was viewed a lot. So I think that's sold. I don't know if it's sold yet, but it was. I think it was going for around $2 million. It was this massive home, massive block. It's really beautiful, but we're starting to see those inner premium suburbs in Townsville start to see pretty good growth. You could follow international demand. It's really fascinating to look at where people from overseas are looking on our site. Chinese property seekers, ISP addresses from China. The number 2 top destinations, number 1, Melbourne CBD. Number 1 is Carlton. Number 2 is Clayton. They're following universities. If we have a look at the jump in Tasmania, it is, we saw a 60% jump in Chinese looking at Tasmania. I thought it was tourism, but apparently the universities have done a big push into Asia, and that's really starting the residential demand is really starting to follow that. These are the top 4. If we have a look across all cities, Manly, sort of that iconic Sydney is the number 1 destination where offshore buyers are looking at. South Yarra, St Kilda, and also Surfers Paradise. It's interesting looking at Japanese property seekers from Japan. Surfers is still number 1 with them. So, we're looking, how long was it? 30 years or so since we had that big push from the Japanese into Surfers Paradise. They're still very, very, very interested. They don't have the money to spend, not like the Chinese, but they do have the aspirations. Looking historically, strongest growth suburbs, very much Coombs, you can see there, that's a new development area. Stanwell Park, Wollongong, we are starting to see more and more demand in Wollongong following that Central Coast issue of much more affordable housing. Kinglake West burnt down a couple of years ago, but he's now recovering and saw 52% growth. And most in-demand suburbs, so I don't think I've got much time, but I'll quickly go through these. Most in-demand suburbs for buyers at the moment. When we talk most in-demand suburbs, it is far more people looking to buy than listings. Again, Wollongong starting to feature prominently on site. Farnborough Heights at number 1. The Basin, number 2, outskirts of Melbourne. And Narrowena on the northern beaches. So northern beaches has been interesting. Manly hit 3 mil median earlier this year. We started to see a lot of buyers back off from Manly and start to look more inland on the northern beaches. So Narrowena and Allambie Heights started to feature there. And when we look at renters, I'll finish up on this one, it's all about Gold Coast. So 9 of the top 10 most in-demand suburbs in Australia are on the Gold Coast. So very much a very hot rental market, a very hot buyer market. So I'll finish there and get Adam back on stage.
I'll get you to stay up here. So, Nerida, we touched on Brisbane, or you touched on Brisbane. And I've been up on my high horse a couple of times talking about Brisbane, the growth prospects, the infrastructure that's being built, the population, both net interstate and net overseas, are starting to turn around now. In your mind, what's the next 3 to 5 years look like for Brisbane?
Yeah, I mean, it's positive. I mean, we have been looking recently at the number of people in Melbourne and Sydney looking at Brisbane, and there's certainly the interest. I mean, the issue's always been jobs and some early signs of rental demand. They're starting to show that there's probably more jobs than the official results are showing. So yeah, but good. I mean, it's affordable, it's livable, there's all those things that make a great city. The jobs are the thing, and it looks like it's slowly picking up.
Will we see that southern invasion over the next few years in your mind? Will we see that number kick up? I mean, our median house price is half that of Sydney.
Yeah, I mean, we're seeing that. Yeah. I mean, it does seem to be hitting Gold Coast a bit harder at the moment. I think the beaches are a big factor, particularly from people in Sydney. But if you look at the jobs in the Gold Coast compared to what they're in Brisbane, they're quite different, and not everyone can live on the Gold Coast, and Brisbane, does attract more white-collar employment than Gold Coast, so that'll be a factor.
Excellent. Would you please thank Nerida?